is having a good day. Ed Mines is having a good day, hoping that Doji is off to a good day as well. And we're going to talk a little bit about, well, where the market sits right now. As we move into the day before the CPI data, well, we've got to be a little bit cautious, right? And I always urge caution, but I always state that when we look at momentum and we see that there are breakdowns, breakouts, breakups, breakout, whatever, however you want to call it, you have to take a little bit of a step back and you have to make sure that you're always constantly managing your risk. It doesn't mean that you're moving to cash. It doesn't mean that you're selling everything. It just means that you're aware of what is going on in the world right now and how it can impact your money. Not my money, your money. And that's what matters. The oysters did not beat me. I defeat all man. Rocky 4. The stocks that are actually worth engaging in trading today, we'll talk about that momentarily. We'll talk about whether or not this is a safe day or a day that is a trap day as well, where the smart money is positioning, and your top screens, stocks, and trading strategies for the day. Because again, as you know, 9:30 comes quick. And as we look at the futures at this moment, right? Not really a whole lot going on. The fact that that energy is turning around is very critical to me, and the fact that gasoline sitting at that $2 line. But if we go through the one-day performance, cocoa, gasoline, natural gas, this is some like Mad Max level things that are rallying at the moment. Meanwhile, Japan selling off, profit taking. Lumber, lean hogs. Lumber is again showing us there are some problems coming here in this economy. Construction not as robust as we think. Lumber falling while, again, housing stocks continue to rise. Very important to keep this in mind. That's why you got to watch the XHB, why you want to be on both sides of these key moving averages. Momentum remaining strong here. But if it breaks down, I promise you, it will break down. All right, momentum. Number of stocks breaking out, plus 5% on the week, plus on the month, beta 1 to 2. That's the poor man's version of this. I'm not going to go through the coefficients of every sector. Every sector has different coefficients because every sector has different betas. Therefore, we simplify this as much as we possibly can for people. So we take the number of stocks breaking out versus breaking down. And as you can see, we are at plus 5. And that's good, right? We want the markets to go up. I don't know why everybody wants the markets to fail. No, we want the stock market to go up. Up is good. Up is great. You make money. It's fine. You get out of the way when you have to get out of the way. And we talk a lot of crap about the market, right? Valuations are too stretched. Too worried about, oh my gosh, it's just like the dot-com bubble. No, it's not. The dot-com bubble didn't have passive investing like we have today. So, number of stocks up 5% on the week. Number of stocks up on the month. Up is good. We like up. And then we take a beta 1 to 2. You got 24 stocks right now that are hitting these key metrics. And these are breakout names. Look at Builders First Source. Look at DR Horton. Look at Lennar. All the housing stocks. Guys, I can't beat this into the ground more. I can't beat it into the ground more. Since we did the 13D analysis back in May, what happened? Everybody owned the housing stocks. They're still running. Some of these names are up 30, 40%. And yet, people are still saying, oh, no. Housing is bad. I don't want to own housing. Yeah, you do. Consumer cyclicals, all of these stocks. Now, not just that, look at Western Digital, look at Lam Research, look at Broadcom. Those semi-names continue to break out. That's bullish. Paramount, Skydance Corporation. Didn't even know you were a thing. I guess there was a deal done, and I guess we're going to have to chase that momentum. One trade at a time. On the other side, let's go to the downside on the S&P 500 and look at the stocks that are breaking down. 7. Chipotle. Oof. We had a conversation about this the other day. It was Friday, and it was the fact that I'm going to be very honest. I used to eat a lot of Chipotle. I really like Chipotle, but then I stopped eating it. And then the stock really started to tank. Is this all me? Yep. I now know that when I stop buying Chipotle, it's time to short the stock. Look at that. I legitimately stopped eating Chipotle in mid-July. And there is a reason. Because I had gained way too much weight. And now 56 took us to 39. Lesson learned. When Garrett is not talking his book, short the stock. All right. Texas Instruments, FANG breaking down. I want you to be very aware of this one. Right now, with oil prices moving a little bit higher the way that they are, OILU is what you're paying attention to. If the OILU holds above this key 50-day moving average, think about going long FANG. Think about looking for a reversion here. As you can see, we've touched that 137 line multiple times going back to May. There may be a short-term opportunity to do what? What, Garrett? Push back to that 200-day moving average right here, 150. Please don't short cheesecake. All right. All right, we're green across the board. I will let you know, once again, if the market is in the process of breaking down, it will be found in the FNGD. And people have asked me about this. They said, Garrett, the FNGD is at a new low for the year. And I said, that's the point. This right here is an inverse 3x leveraged ETN, exchange traded note. It's supposed to go down. It has decay. And this is a measurement of FANG debt, Magnificent Seven debt, but also on top of that, when this breaks out, leverage is leaving the system. Okay? So we are paying attention. We are waiting for that day that it breaks not just above its 20-day, but above its 50-day moving average. Now, Don is going to be focusing on volatility, which I obviously have no complaints against that, right? You're looking for the UVXY to break above its key moving averages. And as you can see, the UVXY is holding its line. If you want to turn the other way, look at the SVXY, which is a short-term inverse volatility, and that continues to rise. So right now, this day, 8:54 in the morning, we don't have a real volatility cue at the moment. But if this starts to break down, that's where we get a little nervous about what's happening in the markets. That's where the headline risk actually manifests. But we don't have it today. So now the question is, how do you trade a day like today where there isn't a lot of volatility, where there isn't a sudden news headline event? Well, that's why you have to be a member of TheoTrade. That's why you got to get in the room with us and trade with us and look at unusual volume, unusual options volume to focus on what are the optimal ways to trade volatility right now versus what might happen in the next 10 to 15 days. This is what we do all the time. So if you're not a member, do me a favor, just click the damn link. Get in there. I'm going to be here from 3 o'clock to 4 o'clock today, and I'm going to show you how to take the trades that we are focusing on, taking the names that we are focusing on right now, and utilize what the market is giving you. How do you sell spreads to make 20% in a month with an 80% probability of profit, but protect yourself to the downside of 10%? These are the things that we educate you on every single day. So do me a favor. If you're not a member, take the jump in. Give us a month of your time. I promise you, you're going to get a lot out of it. And you're going to find that Jeffrey Bierman, he's loud, but he's going to teach you a lot. Don, he's going to teach you a lot. Blake, he's going to teach you a lot. Brandon, he's going to teach you a lot. You're going to find an expert who aligns with your risk profile, and you're going to benefit from it. So again, I don't try to sell hard. I don't try to ask you guys to do something that you don't want to do. But now is the time to do this as we head into the fourth quarter. All right. Now, on top of this, we always focus on what's going on at the macro level. So again, AI deals, and we entertain. Are you not entertained, Ed Mines? That's the question. Nebius up 50% on the AI infrastructure deal. I continue to remind everybody, pick and shovels, right? Why is NVIDIA leading the board the way they are? Because they're selling picks and shovels during the gold rush, right? The AI gold rush. Companies are emulating that. Nebius is emulating that. You need the infrastructure. And the infrastructure in AI, those stocks are killing it. So what do? Well, again, it's all about understanding the mathematics and the odds of success. You want to own these stocks, but you don't want to have to chase the momentum. So again, if you know how to sell credit spreads, if you are educated on what matters in this world and what you're willing to own 100 shares of it if you had to, or if you want to, we'll teach you how to. We'll do that today at 3 o'clock. Oracle earnings are expected. Year-over-year revenue from the cloud to the cloud, 13%. All right. Tech Resources and Anglo American are merging to a $53 billion copper giant. That tells you everything you need to know about the current state of the world. A lot of people are going to chase those AI gains. Remember, things that you can put your hands in the dirt and you can feel. Copper, gold, silver, actual assets. We could do that every day with the F and Graham score. F and Graham, not F and Graham. I know what you're thinking. Big tech and mining headlines are fueling sector momentum. You want to pay very close attention to the fact that, again, gold and silver still feel cheap. I know that sounds insane, but if you are looking at the gold miners right now, how do you trade it? Well, you can try to chase that momentum, or you can do what I talked about a week and a half ago when I gave this trade away. That was selling spreads down here at the 55, 57 level. 20% probability of profit, 80% probability of profit, 20% return, 100% annualized. That's what we were looking for. You see the 8, the 20, everything rising at the same time. Right now, the trade that we have is under that 50-day EMA. So we have a support level here, a support level here, and a support level here. Something catastrophic would have to happen for that trade to lose money. And we're always trying to take 65% of the premium that we sold. So if we look for a 20% return, we try to get that 13%. We take the cash out and we roll it into something different. All right. On top of that, as we move into the rest of the day, we got some employment revisions. Downward adjustment of up to 900,000 jobs. It reinforces the case for the Fed rate cuts. And as I've said time and time again, expect this number to go up. Expect this number to go up, especially if the CPI number is weaker than expected. I still think that this is going to hit. The odds of a 50 basis point cut is going to hit 20% by next Wednesday before we even get to the Fed meeting. But I will say, this is important. If they only cut by 25 basis points, this has to be removed. So what happens? The market goes down because you have to remove this from the equity futures. So next Wednesday is going to be a volatile day. We head into Third Friday, which is always an incredible day because trillions of dollars in contracts will be exchanged. There's going to be a lot of opportunity to trade next week. So I want you to focus on preparation. I know we're 8, 9, 10 days away from these days. But the thing is, if you take the time to really understand the macroeconomic environment and start to prepare yourself, even paper trade ideas built around volume weighted average price, looking for reversions, things that I've focused on with my team over at the Tesla Group, these days can and will make your year if you are prepared. I'm asking a lot out of you. I'm asking you to train for the next 8 days. But I'm telling you, next Wednesday, Thursday, Friday can and will be the best trading day of the quarter if you are prepared and you have multiple strategies going into those days and you recognize what the opportunities are. We're going to continue to drill down into those potential opportunities as we go. On the other side, global politics and FX moves, the UK, Japan, and France, this place is a mess. You thought the US was a mess. Have you been paying attention to France? Have you seen what's going on in the UK? All of these things mattered. I know they seem far away. I know that one of the advantages of being in the United States is that we have two oceans on the both sides of us, right? Nobody's coming from an amphibious advantage. But when one nation like France or the UK sneezes, it can cause a global financial pandemic. It happened in 2020 with the gilt crisis. It happened in 2015 with China. It happened in 2011 with the European Bank. It happened in 1998 with long-term capital management and their exposure to Russia. It happened with the Asian financial crisis in 1997, tequila crisis in 94. All of these things are interconnected. And as the BIS said in their most recent report in April, the central bank, the United States Federal Reserve, is now at the mercy of everybody else. So you have to pay attention to what is going on internationally. Last August, we had the largest crash by the Nikkei in 25 years, 35 years, 1987, 38 years. Wow, my math is terrible. The point is, we are all interconnected. Janet Yellen said in 2017, 2018 that we would never have a financial crisis in our lifetime again. And boy, was she wrong. The world is interconnected. So you have to get up, and this is my job. This is what I focus on. I'm happy to share this insight with you every morning for free, just for being in the room. The UK is a mess. Japan remains a mess. France potentially could sink the entire continent. What will ultimately happen, though? They're going to print more money. And what will that do? Drive equity markets higher. Okay. British pound strengthened to mid-August highs. The euro weakened on French political uncertainty. I can't believe that Macron's still around. I was shocked to find out that Macron and Ursula and Christine Lagarde, they're still there. You would have thought that they would have found anyone else, not just on their side, but also, I mean, look at the politicians in the UK on the right side. It's the same crew. It's like the 18th season of the worst reality show I've ever watched. Fed continues to cut. We're going to move lower. We're going to go down to 4%, and then we'll go from there. All right. Let's get time for the runner. Secret Agent Charlie knows what the score is. Look at that. You don't want to hear me. You don't want to hear me complain. Does that mean inflation is on the rise? Rosario, where you been, bud? The Federal Reserve has effectively given up on inflation. And if you need to really understand where inflation sits, I always invite you to read the Chapwood Index. What these guys did is pretty brilliant. They just went into every city in the country and they tracked the prices of things that people actually buy, the top 250 things. And this is how much the cost of things went up for the last 9 years. An average compounding, keep this in mind, compounding 13% in New York. So is the CPI 3%? Sure. Is debasement 8%? Yes. Is the real cost of living going up? Is that which is what inflation truly is? 13% in Manhattan, 13% in Chicago, about 10.5% in Phoenix. These are downtown areas. These are the urban areas. This is where people live. The cost of everything has gone up post-COVID, and it is compounding. So are government statistics bullshit? Yeah, 100%. What'd you think? They were gonna be honest? No, 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 no. No, 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 no. And as you can see, a lot of California there. The point that I'm making, though, is that all of the things, like if you're going to invest and you're going to trade around this stuff, you have to be aware of the fact that there is a complete and total dislocation in the headline data. And that's okay. We're all playing a game, and we got to treat it like a game. They're going to tell you that it's 3% increase in prices. I'm going to tell you that it's really 13%. And I'm not wrong, because these guys actually did the measurements. 13% every year for the last 9 years. Yeah, Miguel. They literally went into the CVS's and the Walgreens and they tracked the prices. There's a reason that your Doritos have gone from 99 cents to $2.99 in 5 years. And everybody goes, huh, I remember those Doritos. They used to be 99-cent bag. Now it's smaller and it's 3 times the price. You're not insane. You're not insane. And the point of this is, again, I'm not making a political rant about this. I'm pointing out prices are going up. This is all going to be inflected in stock equity prices as well. And what are the things that you invest in for the long term to take advantage of what you're seeing right in front of you right now? That's what we're going to do in the last hour today. Okay? Buy now, pay. Yeah. And Affirm, again, you can buy now, pay later on your King Reese's with Affirm. There's a reason why this stock is doing what it's doing. Let's take a step back. Let's go monthly. Ooh, yeah. Look at that. Buy now, pay later, everybody. Affirm, pure momentum. Great stock. Great stock. Perfect representation of where we are now. It's 9:08. We got to get to the runner. Won't the cost of this increase in cost be positive for precious metals? Yes. So we actually wrote a report last March called The Hedge of Tomorrow explaining this. We were long gold at 2,100 and long silver at 24. And we made a big deal about it. And Bitcoin was at 60 at the time, 60,000. So yes, will it be beneficial for precious metals? 100%. Not copper, though. Copper is linked to the Chinese economy. But gold, silver, palladium, platinum, 100%. Absolutely. Again, as I keep saying over and over again, all roads lead to more monetary inflation, which is very, very, very bullish for gold and silver. And funny enough, going back, I believe, to 1999, the S&P 500 and gold are both up exactly 658%. Both of them. Gold is following the market, and gold is also up because of the debasement of the currency. I have to get to the runner. I was told that at 9 o'clock, you get access to this. And here I am, just dilly-dallying. CrowdStrike. Improving momentum, coming off that bounce, off that 200-day moving average, pushing above that 8, now above that 20. Here is your line in the sand, right back here at that 427.87. Buying in the money here, selling at the 440 level. All you're trying to do at this point is just get from here to here. You keep a very tight stop, you buy in the money, and you sell out of the money. Let's take a look. $428.94. All right. So what we're looking for here, looking out maybe to like the October 17th. Oh, man, they got earnings coming up. Let's see if we can keep this cheaper. They have earnings like in a week, don't they? Ah, that's rude. All right, well, short term, let's keep it short term. 427.50 for this Friday. 440. There you go. 468. 468 to make 782. 41% probability of profit. Your stop comes right back here to that 20-day moving average. You're looking for momentum to take you back up and see if we test that level. Just looking for that really short-term move. As you can see, bounced off that 200-day moving average multiple times in August, and now some strength returning. Keep it tight. You can obviously do that, or you can do something a little more simple, which is the 430. Lower probability of profit, unfortunately, down at 37%. But your stop goes right back to that key moving average. And as you can see, you're defining your risk if you're making this type of trade. And you got 2 days, right? 2 days to decide if you want to stay in this, get out by tomorrow if it goes the wrong way. But I do like the idea of trying to just trace this back up. You can see we pushed here, we rejected, we came back down. I'm looking for a move back up to around that 440 level. On CrowdStrike, Okta, I don't know what they do. I don't care. Never did. But pushing above these key moving averages, same exact strategy. 92 to 94. So maybe a 92.50 to 95 is the spread that you would try to engage in. Or keep it simple. You see the way that that 8-day moving average comes back up, swinging back up, bringing the stock with it. Short-term momentum, very bullish. Again, looking for a move back to 94.60. Relatively simple short-term duration trade. On the downside, I'm going to tell you something. I'm going to take a victory lap on this one. MGM. I went long here. This was in the runner. This made 211%. That popped to the upside right here. Look at that move. That's what we're looking for. Keeping a tight stop and looking to try to ride the upside. This was a 211% return that we had on an option trade. Now we're breaking down. We've broken through the 8, we've broken through the 20. Now we're breaking under that 50. And what we're looking for here, same thing. 36.64 down to 35. Pretty simple trade. Buying at the 36 level or even the 37 level. When I talk about that, I mean put spread. And then selling down at the resistance level. Just right here. 35.50. All right, so let's take a look. This will take its sweet ass time. Go into next Friday. What I like about this is that you have the 50-cent movements as well. So you can focus that on the option sheet. So let's go with the 36.50 call or put, forgive me. And let's right back at that resistance level, which is around 35.40, 35.50. Okay. If you buy the 36.50 put for next Friday and you sell the 35.50 put for next Friday, $47 to make 53, aiming for 112, 113% return, break even at the 36.03 level, 44% probability of profit. Pretty simple. All right. We have a couple other names on this. I want everybody to be cautious trying to short Occidental at the moment, largely just because oil prices are chopping around the way that they are. If oil is not able to sustain, an obvious move back down to the 45 level is clear, but a lot of chop here. In addition to that, Las Vegas Sands, we are short on the casinos. So once again, buying at the 45.50, 54.50 or $55 level down to the 51 or 51.50 level. Same type of spread, looking for a move down here to hit resistance on that 50-day moving average. We got 5 minutes left, which means we can dig into the momentum stocks that we are paying attention to, and that gives us Yelp. Yelp hopefully getting off the map. I'm not a big Yelp guy. I don't even know if I've actually ever used it. I know of it. I'm sure it's wonderful. It's fantastic. But can we get above this 20-day moving average? Can we push back to that 33 level and even that 35? If you're going to trade this, I pay very close attention to the 8-day EMA, see if we could push above this key level. And then these are the types of stocks that when they get above these key levels, you should be paying attention to Brandon's Ghost Print Scanner. Because if there is action happening around these names, these can break out or break down very, very quickly. So I encourage you, be a member of that. Always know where trades are being made at any given time. Pay attention to what is happening with delta volume. Pay very close attention to what's happening with options trades and know where the money is positioning itself. But with Yelp, as I look at this right now, 32, do I have any opinion at all about Yelp? I legitimately worry about Yelp the same way that I worry about the sun coming up. I don't know. I don't know. I couldn't tell you who their CEO is. I couldn't tell you if their balance sheet is strong. I don't really care. What I really care about, though, is that they're breaking these key moving averages. And it's pushing higher after a big sell-off from that 42 level all the way down to 30. And now is slowly getting some momentum back into it. And I'm willing, because I'm a trader, to bet small, focus on that $32 level, look to sell to the upside. If the stock reverses and it breaks down, oh well. It all really comes down to the broader macro, but we have some strength in that MFI. It's good to see some volume coming in. You see some strength in that MACD, and we have some positive movement on that ADX as well. On top of that, ACT. Been a while since I traded in ACT, but very strong momentum. Continues to bounce higher. This was not a stock that was impacted negatively during that trade crisis that we had. This only fell about 5 to 10%. So again, strength and momentum. This is a stock to always pay attention to because when it does break its 20 and its 50-day moving average, we've seen a couple dollar moves, right? 10% moves in very short duration. Then it will sell off. People will take profits. We'll retest that 200-day moving average. And then what happens? We bounce right back. So always keep an ACT on your screeners. Always return to it. Know where it is in any given moment. And you can make some money on this stock. On top of that, Stratex Security as well, improving momentum. This is something that I'm in. Right now, looking at the way that momentum is operating, I'm just going to say buy the stock, buying the stock here at 68, and then setting a stop right back here at that 50-day moving average of about 65 bucks. Looking for a positive momentum move that could potentially take us back to that $80 level, maybe even higher. But as you can see, this is a stock that has really had strong momentum going back the last 2 years. And again, it's all about smooth momentum. Can it get back? Can it retest some of these levels that we saw in the last decade? It did very, very well post-COVID. We continue to see continued strength here. And just looking across the board, this is cheap. 4.4 on the price to cash, 0.5 on price to sales, PEG ratio at 0.66. It is mathematically inexpensive, an inexpensive stock. And all you're looking for right now is just continued momentum, continued strength. We'll dig deeper into the F and Graham Scores stocks later today. All right, 9:20, everybody. I hope you got something out of this. What just happened? Who knows? I don't know. What happened? You tell me. Took the MGM trade, made bank on a call spread. Love to hear that, Eric. All right, Don's coming up in a minute. He's got some music for you. He's going to play Ramblin' Man. Why not? Ramblin' Man? You got any Marshall Tucker? Something? They just played at the Maryland State Fair. Ed Mines, good to see you. Scott, thank you. Secret Agent Charlie, as always, great to see you as well. Doji, Rosario, Erica Northport, I hope you all have a great day. I'll be back at 3 o'clock today to dig into some different types of strategies for you. And on top of that, as always, if you are not a member of this community, get it together. Click the link, name a price, tell us where you want to be, and latch onto somebody. It can be Gianni, it can be Professor Bierman, it can be Don, it can be me. But our goal here is to help educate you and guide you through these markets at all times. And we have a lot of uncertainty, a lot of questions coming up. We have CPI tomorrow. We have the Fed next week. We have a lot going on. And every single day, our mission remains the same: to keep you educated, to keep you entertained, and ensure that you have the best opportunities to profit. Everybody, have a great day. Allman Brothers, I'm on board. Take care, everybody.